Right now is Mahoney Asset Management CEO Ken Mahoney. Also joining the conversation all morning long this morning is Optimal Capital Director of Strategy, Francis Newton-Stacy, and the Wall Street Journal's Assistant Editorial Page Editor, James Freeman. Great to see everybody this morning. Thank you so much for being here. And Ken, let's first talk about Twitter. Elon Musk is now putting this deal on hold. What do you make of this? Once again, in his typical style, he tweeted out this news that the deal is on hold. The stock is plummeting this morning. Your reaction?
Well, usually when you do a deal, Maria, you actually do due diligence and then you make an offer. He's done it the other way around, right? He's made an offer and now he's doing his due diligence. And look, this company, since coming IPO 9 years ago, the stock is unchanged. They never really found a way to monetize it. And now he's getting underneath the hood and he's looking at these, all these anomalies of things that are like how many percent people are bots and how many percent is this and how many are real interaction. And my guess is this is to further negotiate. The stock's going to come down and maybe we'll come back with a different offer. Again, I hope he gets it because of free speech and all the reasons why we cited before. But at the end of the day, I think this is a negotiation tactic to bring the price down lower and for him to scoop it up cheaper.
Yeah, I mean, James Freeman, jump in here because when Elon Musk first took on this deal, he said he wanted to do away with the bots, do away with the robots on Twitter. Devin Nunes was on this program a couple of weeks ago saying that there's so many bots. And now Elon Musk says he wants details about it until he gets clarity on how many bots there are. Twitter put in a filing estimating that the false or spam accounts represented fewer than 5%. What do you think's going on here, James?
Yeah, I'm curious whether this is just about price. Of course, when he bought it or when he made the offer originally, he said this is not about the money. This is about saving the public square in the digital age. So I guess it's somewhat about the money. Maybe he's acknowledging now, looking under the hood a little more. But it couldn't have been much of a surprise, as you pointed out, that there are a lot of fake accounts, given that he had cited that issue. Maybe he just wants to be sure that it's not largely fake, that there actually is a real huge digital conversation going on among real people. And I think there is, and I think that's probably the conclusion he'll come to.
Well, it's interesting that he says that he wants more clarity when Twitter put an SEC filing out that says it's less than 5%. So he's questioning what Twitter is saying, right? By saying we want more clarity because Twitter just put out this SEC filing. So he doesn't believe it, you think?
Yeah, I suppose maybe it's an estimate, and he wants to know how they got to that number, and maybe it goes into a strategy for how to grow it. I think you do need to figure out how much of it is real and how much is phony conversation generated by computers or people with ill intent who are hiding their identities. But yeah, it could be a bumpy ride to closing. I guess the Twitter executives probably knew that already.
Yeah, I mean, Ken Mahoney, this is just one more question in a market that has been rife with questions. Look at what happened in crypto, crashing $2 billion in a day, almost $1.7 trillion in losses from the highs. Bitcoin plunging below 26,000 for the first time in 6 months. Now it is bouncing this morning up to 30,271. But you also had Terra USD plunging as well, and of course, breaking the buck. What's your thought on the crypto mess and whether or not this represents a dot-com deja vu from back in 2001 when we had all these hopes about dot-com until we didn't?
Well, I think there's a lot of deja vu going on there. And, if you look at crypto, the reason why to own it is because, you can transfer money as well. Guess what? Through Zelle, through Venmo, there's so many different ways to transfer money. Then we're told that, hey, crypto is a great inflation hedge. Not, we have hyperinflation, 8.3% CPI, and it's going down. Then we heard, well, listen, the reason why you want it is because of currency dislocations. I mean, the Russian ruble went down to almost zero. And then the last thing is like, hey, it's not correlated to other assets. And that's one of the reasons why you want to own crypto. But if you superimpose a chart of crypto and the NASDAQ, you get the same chart. So it's not really helping in that way either. And I think that's why we're seeing so much pressure, because all the reasons why to own it are not working right now.
So where do you allocate capital then in this environment, Ken? Do you think the Fed's going to be able to achieve a soft landing, that is, take interest rates up but not take the economy into a recession?
I don't think so. I mean, the Federal Reserve has lost so much credibility, especially last year, that's transitory. You know, Powell gets reappointed, and then we retire the word transitory. And last year, we have GDP, 5%, 6%. Good time to be raising rates, not when first quarter GDP is 1.5%, negative 1.5%, and now we're raising rates. So the Federal Reserve, we know, is behind. But the constant banter, I mean, there's 7 governors. I feel like there's like 40 governors. I mean, all the speeches that are out there. We get it. They're going to raise rates. And I think, really, for us to kind of get forward the market instead of these one-day wonders, which I hope today is a one-day wonder, we'll take it. But we need more sustainability. We need the Federal Reserve to calm down a little bit. We need inflation to calm down a little bit. We need the recession talk to calm down a little bit. And we need earnings to kind of get back going again instead of this earning suppression. And by the way, that acronym I just gave, FIRE, is actually FIRE. We need to put some fires out, Maria, before we can see the market have more sustained rallies instead of these one-day wonders.
All right. We got the yield at 2.5 basis points higher on the 2-year and the 10-year, also showing a big move upwards in yields this morning. Great to see you, Ken. Thanks so much. We appreciate it. Ken Mahoney joining us this morning on a lot of